Good evening, traders. Today we are on the 4th of December 2021. It's a Saturday evening, 17 minutes past 5 p.m. and we'll quickly take a look at how the markets fared yesterday and also from a week-on-week perspective. I'm zooming in on the Nifty near month futures daily chart, and Friday's close was disappointing in one word. 193 points down, a little above 1%. The close 17,239. If you recall our last interaction through these daily videos, we had an anticipated bounce back, and the bounce back did take us towards that 17,350, 450 zone. We spoke about this gap, if you remember, this little gap over here, this one. And we said that it can extend further towards 7,500. The swing high was 515. And the call was, it bounced back pretty well, so it should consolidate / correct, but shouldn't give away too much of the gains. That would be a sign of strength. But it did manage to give away quite a bit, and it slipped below that 17,000. We had this blue line drawn that if it stays above it, it will be perfect and ideal, but sadly, it has slipped quite a bit below that. And as we record this video today evening, a look at the SGX is 17,154, down 80 points. So that's not good news. If this is what we see on Monday morning, then a chunk of this bounce back will be gone. Which brings us to the short-term trend, which was trying its best to reverse on the upside, has again started to show signs of weakness. We will not call this a trend reversal yet. We can see the moving average is trying its best to roll up. This is primarily is a function of the movement of price, but then now again they have started to slope down. So I think in simple words, we are back to, or we are on the way, we are knocking the doors of the fact that we might slip back to that kind of situation in the market, which is volatile and selling at every rise, very difficult to pick up the bottom, etc. So I think we should go back to a little bit of careful, cautious stance. It was always there, but tricky situation whether we will see it. Will it take us down to the swing lows or not? If you recall, I'll again go back to the 75-minute time frame. If you recall, we had drawn this volume profile, this particular one, from the swing highs to the recent price, and we've seen some decent amount of volumes picking up, down here, which has supported this bounce back, and we've seen some volumes up here also, which actually supports this resistance. So if I extend this volume profile to the recent bar, and we can see that 17,550 all the way down to 17,120, 150. That's where a majority of these volumes have happened since the high of 15th of November. So it's very likely that the index will oscillate, will try to stay within this particular range. And a break beyond this range, a significant break beyond this range, will probably lead us to the next big directional movement. So strategically, you should continue to stay careful. I think careful should be on both sides, whether you're going long or short. And I think I'll reiterate the fact that the best thing to do is stay either ultra short term, that is intraday or a very small span of time, or ultra long term. In between swing trades for a day 1 to day 5, 3-5 day kind of trade is going to be relatively difficult in this kind of market environment. Let's we'll scan the markets, but let's quickly take you to stockcharts.com, where I look at the RRG graphs on a weekly perspective. The benchmark over here is Nifty from a weekly standpoint. And if we take a look at around 1 week's performance, and I'm going to quickly make it 1 week and sort the percentage change, we can see gains coming in from IT, media, metals bounce back, mid caps, Nifty's up there, but the pharma, energy, consumer durables, FMCG, they continue to dragged the market last week. It's been, I think, if we take a look at the market and if we change it to a weekly chart, then 1, 2, 3, 4, 5, 6, 7. It's been 7 weeks since the index topped out at the highs of 18,594. And so if you come here and if we change this to 7 weeks, just to see in this particular time period what has happened, we can see throughout, of course, weakness from a tune of 10% from the metals to some bit of support coming in from IT. It's flat. Now the important thing is, if you allow me to sort the tails, that is to figure out in terms of these RRG graphs, where is the pocket of strength and weakness. Real estate continues to stay in the leading sector and now it is slowing down. I think one should continue to look at DLF and Godrej Properties and Oberoi Real Estate as a prospect buy on a dip. We should not go short or create a negative stance on the real estate as of now. Media falls in the same category, energy as well, PSU banks, that's the SBI and Bank of Baroda, and then mid caps. In fact, if I keep on clicking further down, and I personally like the improving quadrant where we have auto, private banks, bank nifty and financials. I'll stop here and try to share that real estate, media, energy, PSU banks and mid caps, this space. Mid caps would be a little wider. So considering this sectoral indices, one should not create a bearish stance even if they're correcting. See, in a correction, or most of the stocks and sectors fall and they correct. That does not mean that we have to go and sell each and every one of them or try and create a bearish stance in all the sectors. The strong sectors we should respect and we should look to probably buy them on a dip once they hit the supports, once the supports are confirmed, once they confirm a bounce back. These will be a better pocket to buy into. Similarly, auto as well. Now the interesting concept or interesting observation is private banks, bank nifty and your financials, all three of them are in the improving quadrant. And this pocket almost will add up to around 40% weightage of the overall market. So this is a very, very important chunk here, which is right in the middle. Now, my personal experience with these RRG graphs is it's not necessarily that they have to move from improving to leading. They can slip back to lagging also. And that might happen if Bank Nifty and the banks continue to weaken. But if the market surprises us, if the market breaks the low, flushes out the weak hands, bounces back like a really sharp bounce back, we don't know. But when it bounces back, I would request you to keep a very close look at the Bank Nifty and the top 5-6 stocks which makes up the Bank Nifty. I would personally like to see whether the bank starts to participate in the bounce back or not. As of now, the Bank Nifty, the banks have participated on the downside, and on the bounce back they have not participated. Unless this pocket picks up, it will be difficult for the market to sustain highs. As it bounces back, it will be difficult. It needs support from those stocks from that pocket, which matters. So please keep a close eye on this. Down then we have the IT, which is weakening, because if you take a look at the sectoral index, it shows weakening over there because it is completely range bound. That's why it has given us a weakening kind of indication there. A break below this low, of course, reverses the index. But as of now, it's doing its part. It's just holding on to its gain, and that's enough for the Nifty to get some support. Apart from that, pharma, metal and FMCG and your consumer durables, they are mostly lagging, especially FMCG and consumer durables was again a little bit of disappointing. But pharma and metal, if you take a look at metal and pharma, both of them are in the lagging quadrant, but the sloping up means they're trying to pick up some momentum, which means some odd stocks in the pack which are in a downtrend will try to bounce back. If I take a look at let's say the metals pack and I sort them in terms of percentage change, we'd see stocks like Hindustan Zinc is of course a exceptional counter. It's holding on to its uptrend. Apart from that, stocks like NMDC, I think Jindal, Nalco, I think will fall in the same category. All these are bounce backs in a downtrend. So that's going to be the case in the metals as well as probably in the pharma. But I would suggest, unless there's distinct lows being created and the short-term trend reverses, I would request not to go for them right now. Long-term investment portfolio, that's fine, not a problem, but not from a short-term perspective. They face pretty strong weakness as they bounce back. So that's the RRG graphs which are suggesting that the banks needs to play a role. Now, taking a look at the sectoral indices, going back to NSE indices, IT is doing well, so we can continue to trade into IT, but careful about the lows. The public sector enterprises are very importantly holding at these lows. A fall from here can be a little difficult for the index. Energy, it's Reliance, which has weakened quite a bit on Friday. In fact, rather than looking at the indices, it's important that we quickly take a look at the top 17 stocks which I track, and you would see that Reliance is the top loser. And this is exactly what I was saying, that a bounce back is not sustaining in a downtrend, and it's extending further down. For Reliance particularly, we had marked this volume profile, and that's from where we've got the bounce back. Now, if it weakens further and comes and breaks these lows, then the next range to look for is this one. And this is not a bad range at all for Reliance. As of now, from a high to low basis, the stock had already corrected 16% correction in Reliance is pretty healthy. And in case we come down here, it's going to be around 18 to 19, almost 20% correction. So that's a pretty good range. That's a pretty good range for long-term investors to buy into a falling good quality stock which is correcting. See, HDFC and HDFC Bank needs to play a role, especially HDFC. There you go. So both the stocks are in a downtrend and they're not looking that pretty. Actually, if you ask me, in terms of the trend, they are looking quite weak, especially HDFC. So overall, I think we would do good to, spend another week quietly and let the index play its part. You can do short-term trades, very, very short-term trades, but I would suggest not to create a heavy position overnight from a short-term trading perspective on either side of the market, bullish or bearish. It's still in a reactive mode, so any kind of strong event or news pertaining to the reason why we have corrected can lead to fresh sell-off or can lead to fresh bounce back. So let's give it a little bit time. I personally would love to see, or would like to see, whether the index reclaims 350, 450 or not. If it doesn't, by Monday, Tuesday, Wednesday, if it doesn't, then the possibility of 17K and a break of 17K definitely increases. So keep that in mind, and let's quickly check if we can find any good trading opportunities for Monday, which reminds me that next week I'm traveling and I will probably not be able to share InstaView scans every day. The scans, I would try my best so that I can share my market views with you every day evening, but the scans would be difficult because I will be carrying my laptop and it sits on my desktop. So here we are. Let's come here, InstaView on the Nifty 200 universe. Let's quickly scan and see if there's any prospective counter for Monday. Alembic doesn't look so good. Britannia, no. Bajaj Finserv is in a downtrend and is kind of creating a bearish Harami pattern. Looks weak actually below Friday's low. SBI Life falls in the same category, but the average range of the stock for the last 2 days is pretty wide. Bajaj Finserv is better off. Endurance, Grasim, same story. Hindalco needs another fall to bottom out, I feel. Same with Castrol. Tata Power is an interesting counter. It's created a very small bar on Friday. And then we have Bharti Airtel. This is a relatively stronger counter at supports. Needs a little bit of more time to bottom out. So within the inside bars, I think SBI Life or Bajaj Finserv looks like a prospect weakness below, if it breaks below Friday's low. The bullish and bearish Harami pattern, we will visually check them. Oil, yes, definitely a nice bearish Harami pattern. Adani Ports right at the top of this particular bar, which was pretty long, so not a very good bearish Harami pattern. Britannia, not enough uptrend to call it bearish Harami. Aarti Industries, yes, we can call this, though the range of the baby candle has gone outside this particular bar, so not very good. As of now, oil stood out pretty good. Wipro, same story, but can lead to a bit of weakness if IT slips again towards the lower end of the range that we saw on the chart, and Wipro can be one candidate to lead that. Tech Mahindra is relatively holding much better. Let's not call this a bearish Harami pattern because both the bars are significantly long. Mahindra & Mahindra cannot be a bearish Harami pattern because it's in a downtrend. Bajaj Finserv, we just spoke about, looks interesting on the short side. Ambuja Cement, definitely not. Huge upper shadow. And then we have Bata, no. Adani Trans, no. Hind Copper, not enough uptrend. Marico, no uptrend. Dhani, no uptrend. And HDFC, pretty long, wide range on Thursday. Sorry, not here. I would say all the ones which we clicked, oil is the one which stood out pretty well, and Bajaj Finserv yet again. Amongst the breakout counters, there's quite a few. I would love to see those which are on the verge of breaking outside resistance. Escorts has shown enough strength, so this can extend further on the upside above the recent highs. Escorts definitely a breakout candidate. Adani Enterprise also a breakout candidate, only above Friday's high. These two stocks stand out. Sanofi, no. Polycab, no. Godrej Industries, Fortis, kind of, but it's got some pretty decent resistance around 295. Oil, we took a look right now about the bearish Harami pattern. DLF, no. This I scan low volume and low volatility. That's why it shows many stocks which are in an uptrend as well as in a downtrend. Procter & Gamble, yes, 15,300, 400 level. Again, quite a bit of resistance, but definitely a good counter in your cash portfolio from a breakout perspective. Others, as I'm clicking through them, none stand out from a breakout perspective. Oracle Long are short-term intraday long candidates. Alembic, not at all. Amongst the short, we have Endurance, Ajanta, Biocon, Tata Power, interesting, very interesting, below Friday's low. Britannia and Grasim. Grasim also, Britannia not really, but very interesting would be Tata Power. I use the word interesting because it's got some room on the downside if the lows gets broken. We generally take a look at delivery percentage, high delivery percentage, where the amount of shares taken delivery above a lakh, 70% delivery percentage wise within the Nifty 200 universe. And let's process, see what comes out. We've got Adani Green. All right, GAIL looks interesting. It's gone through a pretty significant correction. ICICI GI also. Power Grid, strong counter, has corrected quite a bit, and TCS. So amongst these five stocks, the one which has shown some pretty decent consistency in terms of delivery percentage, we can see TCS. Of course, it's an index stocks to 60s and 70s, but Power Grid, not so much. I would suggest one can start to look at GAIL as well as mainly GAIL, though it's been 59, 55, 54%. But I like the fact that the stock has given us a pretty healthy correction, and these delivery percentage volumes should mainly be looked for long-term investment purpose, and one can start to nibble into this kind of a counter. Not bad. The long-term charts are trying to improve. So that was the scan, and that's our view on the market. I'll quickly repeat again. Next week till Friday I'm traveling, and I'll try my best to share my market view through these recordings every evening, but I will not be able to do this for the next 5 days. All right, you take care of yourselves and enjoy the fact that winter is coming, and trade well, trade wise. Thank you.